Hello and welcome to my YouTube channel. I'm Safir Ahmed, a senior lecturer in accounting and finance at UK University. I also work with ACCA as an early career investor. This video is for those who are studying taxation unit, whether as part of your ACCA F6 taxation or AAT Level 4 Personal Taxation, or if you're studying taxation unit as part of your academic undergraduate qualification, perhaps BA Accounting and Finance or BSc Accounting and Finance. I have chosen this task from AAT Level 4 Personal Tax Sample Assessment 1. And this is a good question because it covers quite a few points. So the first thing first, in order to attempt this question, you need to break it down into two parts of the questions. So the first thing, you need to make sure you calculate taxable income for the tax year 23-24 in this question. And once you calculated the taxable income, then of course you will be calculating income tax liability. So what you need to do, first of all, you just list down all of the income. So the very first one you can see is the employment income given to us. So the employment income is 85,100. Now, always, if there are any occupational pension contributions, employee occupational pension contributions, you must deduct it from this employment income, because remember, on employee pension contributions, occupational pension contribution, employment, in other words, employment pension contribution, all of these are tax-free. But you've got to be careful in terms of the personal pension contributions. The personal pension contribution, it gives tax advantage, but in a different way. So which I will show you as part of this question because it is given to us. Now, if you read out this information, it is given to us that during 23-24, Mrs. O paid 6% of her income from employment in an occupational pension scheme. So we know that these contributions will be tax-free. So occupational pension contributions, or you can write as occupational pension scheme. So whatever the employee's contributions, we can deduct it from the employment income here. So if you work out 6% of 85,100, so 85,100 times by 6%, which gives you 5106. Now you write this amount in bracket, because remember we are deducting it, and this will give us the net employment income. So the net employment income will be, of course, 85,100 minus 5106, which gives you 79,994. And the next income is profits from property. Now you can write either profits from property or you can write property income. Okay. But I tend to use the same wording as it is given to you in the inner question. So I won't change that. Now the key thing to notice here, profits from property are given to us, which is 32,500. But there are some property losses brought forward. So the property losses brought forward, we can deduct it from the property profits of this year. So the last year, 14,320. So we need to do that calculation here. So which is 32,600 minus 14,320. So this will give us the assessable property profits, or in other words, assessable property income. So 32,600 minus 14,320, which gives you 18,280. Okay. The next item is building society interest received. So I will just write here interest received. And the interest received is 3,540. And the next income is dividends received. So again, that's given to us, which is 10,600. So this will give you the total income before personal allowances. So all you need to do is you need to add up all of these incomes. So which is employment income, net employment income is 79,994 plus 18,280 plus 3,540 plus 10,600. So which gives you 112,414. Now, you got to be careful here with the personal allowance. Now remember that the personal allowance, full personal allowance is available if the income, if someone's total income is less than 100K. However, if the income falls between 100K and 125, 140, then that person will get a reduced personal allowance. Okay. So as you can see that this amount is between 100K and 125, 140. So what does that mean? That means that this person will receive a reduced personal allowance. So we will need to calculate that. So perhaps we can calculate somewhere here. So I can write here personal allowance calculations. Now remember the way you calculate this is net earnings. In other words, it is also known as adjusted net income. Okay, so net earnings is equal to total earnings, okay, minus gross personal pension contributions, and also minus gift aid, again, gross amount, so gross gift aid donations. So I just wrote that formula. In exam, please make sure you write it because you can get some credit even if your calculations are incorrect, because the examiner or the marker will be able to see that at least you know the process. Okay, so the net earnings, I can just write it here. So the net earnings is total earnings. So total earning we already determined, which is total income 112,414 minus, if you look at in this question, there is no gifted donations, but there is one thing, which is the personal pension scheme. So as you can see, Mrs. O also paid £150 per month into a private pension scheme. Now, 150 times by 12, that's 1,800, but that's net contributions. And in order to make it gross, it will be divided by 80 times by 100. So in other words, I will write here 1,800 divided by 80 times by 100. Why is that? Because remember, when someone makes personal pension contributions and they receive 20% from HMRC as well, so this is considered as 80% amount. So therefore, when we are making it gross, we will divide it by 80 and times it by 100. So which is basically 2250. So in terms of this personal allowance calculation, so the net earnings we already determined here, which is of course total income 112,414 minus gross personal pension contribution, which is 2250. And that gives you 110,164. Now, once you determine that, you will calculate the reduction in personal allowance. So the reduction in personal allowance is, remember that this will be excess income and times by 50%. So reduction will be this much. So excess income means that anything more than 100K from the net earnings. So as you can see, net earnings is 110,164. So the excess income is 10,164, and it is 50% of that, which is 50% of 10,164 gives us what? 5082. So the reduction will be this much. Now the personal allowance available will be calculated as, so it's the normal personal allowance amount, which is 12,570, minus reduction, which we just determined it, 5082, and that gives you the personal allowance available, so which we can write it here. So 12,570 minus 5082, so which gives you 7,488. Okay, so this is your personal allowance, so which we were looking for, and you will deduct this personal allowance from these earnings. So again, I will write this in bracket 7488 because I'm deducting it. So this will give you the taxable income, the income which we were after, so we can work out the income tax liability. So the taxable income is 112,414 minus 7488, which gives you 104,926. Now, we need to work out the income tax on this amount. Okay. Now, one thing we need to determine the basic rate band threshold and similarly higher rate band threshold, etc., whatever is applicable in here. So what will be the basic rate band threshold? You can just write basic rate threshold, which will be 37,700, where I have taken the amount, of course, that's the threshold. You can find it in the reference material. If you don't remember it, you don't have to remember it in exam because it will be provided to you as part of the reference material. But I'm just trying to save some time, so therefore I'm not going through the reference material, but you can check it in your own time. So 37,700, and this is extended by the gross personal pension contribution. So the personal pension contribution, employees' personal pension contributions will have two impacts on an income tax calculation question. One, if applicable, you will use it as part of calculation of personal allowance available if someone's income is more than 100K. So which, as you can see, we have used that there. The second impact will be that it will extend your basic rate band, and if needed, higher rate band. But in this situation, we don't need to extend the higher rate band because we know the total taxable income of this person is 104,926, which falls within the higher rate. Remember, higher rate is up to 150,000, so we don't need to extend it as the person's income is way less than the higher rate band threshold. So 37,700 plus 2250, which is gross personal pension contributions. So on this amount, it will be basic rate band applicable, which is 20% for the saving and non-saving income. So 37,700 plus 2250, which gives you 39,950. Okay, so we determined the basic rate band threshold will be this much. So anything more than that, it will be higher rate in this question. So let's start with the income tax calculation. You can give a heading here, either income tax computation or income tax calculation. So we start with the non-saving income first. Now, non-saving in this question, as you can see, employment income is non-saving income and property income is non-saving income. Okay, so I can write here non-saving income, and non-saving income, if you think about it, which is net employment income, which we calculated 79,994. and plus profits from property, which is 18,280. And you deduct the personal allowance. So personal allowance is allocated always against the non-saving income first. But if a person does not have any non-saving income, of course, then we can allocate it against saving income. And then if needed, we can allocate it against dividend income. In other words, if a person does not have sufficient saving income as well. So the personal allowance, which was, remember, 7488, we calculated. So the non-saving taxable income here is how much? So 79,994 plus 18,280 minus 7488, which gives you 9786. 9786. Out of this amount, we know that 39,950 will be taxed at 20%. Okay, so which I can write that amount there, which is 39,950 times by 20%, which gives you 7,990. And anything more than that, so we already determined that the taxable non-saving income is 9786. So in other words, this will be 9786 minus the income we already calculated tax on, which is 39,950. On this income, the tax rate will be higher rate, which is 40%. So in other words, 9786 minus 39950, which gives you 5836, and times by 40%, which gives you 2334.40. Now, they always say that write in whole numbers, so which means that we will round it down to 2334. Okay. So we have calculated income tax on non-saving income. Now we will be calculating on savings taxable income. So the savings taxable income is same as whatever the savings income was. So which is 3540. 3540. Now, there's something called personal saving allowance. So the personal saving allowance, in order to determine how much will be available, we always look at the taxable income. Remember, this is the taxable income. So if the taxable income is below 37,700, then 1,000 first saving income is tax-free. If the taxable income is between 37,701 up to 150,000, then a personal saving allowance of 500 is applicable, which is the case in this situation. As you can see, 104,926 is between 37,701 and 150,000. But if someone's taxable income is more than 150K, they're not going to get any personal saving allowance. But in this situation, the personal saving allowance will be, of course, 500. So on the first 500, the rate of tax will be 0. And remember, the total taxable saving income was 3540. So after this amount, the taxable saving income will be, which is, of course, 3540 minus 500, which gives you 3040 basically. Now, remember that the basic rate threshold is being utilized against non-saving income. So therefore, that the higher rate of saving income will be applicable, which is 40%. So which is 3040 times by 40%, which is 1216. So we have calculated the income tax on saving income. Now, dividend. So the dividends are given to us, which was 10,600, as you can see. So dividends are 10,600. And now remember that dividend allowance is available. Now for tax year 23-24, the dividend allowance is 1,000. For the tax year 22-23, it was 2,000. So depending on which finance act you are studying, the dividend allowance you will calculate it. So in this case, the dividend allowance of 1,000, okay? So the dividend allowance of 1,000 is available. So the first 1,000 of dividend will be taxed, 0%. Remaining amount, so I will write here taxable dividends. So taxable dividends, as you can see, it will be 10,600 minus 1,000, which means 9,600. And we will calculate this at a higher rate of dividend tax, which is, remember, 33.75% in accordance with the Finance Act 23-24. So which is 9,600 times by 33.75%, which gives you 3,240. Okay, so this will give you the total tax. So the total tax that you will be adding all of those taxes, which is 7,990 plus 20,334 and plus 1,216 and plus 3,240, which gives you 32,780. Now the total tax payable, because remember that some of these tax has already been paid. So 32,780 minus pay as you earn. So remember that's the tax deducted at source, which is already been paid via payroll, which is 22,500. So the person's tax payable will be 10,280. So I hope that this video was helpful. So I just thought that this was a good question because there were a few points in there. So first of all, you were supposed to calculate the reduced personal allowance, which I just showed you how to do that, and also how to tackle the occupational pension contributions, which again, we have seen that way to adjust that. And there was a personal pension contributions as well. And we had to make it gross as well, which we did. And of course, the deduction of tax deducted at source and different rates of taxes and the impact on the threshold. So I thought this is a good question to clarify those points. Thank you very much for listening. I will be back with another video. Bye for now.